Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Of course, the cues coming out of global markets are fairly positive this morning. Yesterday, we saw a good bounce after days of sell-off. In fact, after Monday's sell-off, it was, a sign of relief that, we saw some of the stocks recovering from the kind of lows that we had seen in the last few sessions, especially the broader end of the markets. On the mid and small cap fronts, we have recovered half the losses that we saw on Monday. Although, if you look at the price action and since last Monday, mid and small cap indices have been battered out of shape. In fact, the mid cap and small cap indices losing as much as 9 to 11% apiece. The recovery across the headline indices were a little muted. Nevertheless, the Nifty came very close to that 23,200 mark, and this morning, in the pre-open, we can see almost another triple-digit point kind of an up move. So yes, 23,260, that's where the index is at in the pre-open, but 23,350 on the upside will be a crucial level to watch out for. Only experts say that only if we cross that level, we could confirm any kind of a trend, a positive trend in the market. But of course, lots to digest in today's session as well. Global cues looking fairly supportive. Dollar index has cooled a bit. Crude is below that $80 per barrel mark. And of course, the US inflation figures also, within comfortable zones. So yes, lots of stocks as well in focus. All your stock related queries will be in focus. So if we couldn't take up your query yesterday, we'll try and take them up today. So keep them coming in on a live feed as always. But before we move any further, let's quickly take a look at the top headlines at this hour. Stocks end mixed on Wall Street following lower than expected wholesale inflation for December. US Consumer Price Index will be the next crucial data to watch, which will be coming out later tonight. The Nasdaq is down for a fifth straight day, even as the Dow and S&P 500 gain. Asian markets trade largely higher despite a mixed handover from Wall Street. The GIFT Nifty is also suggesting a higher start for our markets, and in the pre-open as well, we can see a good uptick on the Nifty. Crude prices come off 4-month highs, with Brent trading around that $79 a barrel mark. Meanwhile, gold prices edge higher following weaker than expected wholesale inflation in the United States and a softer dollar. Indian rupee remains under pressure, hitting another record low yesterday as the US dollar continues to strengthen. In fact, it crossed that 110 handle as well, but has cooled off slightly. So currency, will be something that one should be keeping their eye on. And among earnings, HDFC Life likely to deliver double-digit premium growth as it reports its third quarter numbers today. Also, watch out for numbers from the likes of L&T Technologies. Well then, let's take a look at the setup then for the market. Yesterday, as I mentioned, we saw minor gains on the Sensex and Nifty. The Nifty was around that 23,200 mark. If we see some bit of an uptick today, we could perhaps look at 23,250 as the near-term level or just the immediate level to watch out for on the Nifty on the higher side. Broader markets, as I mentioned, recovered half of Monday's losses. The mid-cap index was up by 2.5% yesterday, and the small-cap index also gained somewhere around 2% or so. The advanced decline ratio, much to investors' comfort, was firmly in favor of gainers yesterday, because in Monday's session, the NSE advanced decline ratio was 1:11. One stock gaining for every 11 stock declining. But yesterday, the advanced decline ratio was at 4:1, so breadth was strong, and that was of course being reflected in the broader end of the markets. Even the Nifty Bank Index staged a very good comeback yesterday, almost a 600 to 700 point recovery on the Nifty Bank Index. Mind you, it had broken below all the support levels, so some bit of relief coming in on the Nifty Bank Index as well. Most of the, in fact, all the Nifty Bank constituents closed the day in the green yesterday. Financial heavyweights along with Adani stocks were some of the top performers in yesterday's session that led the gains on the index. Adani Group stocks saw very healthy gains. Some of the stocks from the group saw gains to the tune of almost 18%. Select PSU Banks were also doing well. The smaller mid-sized ones, the likes of Central Bank, UCO Bank, Indian Overseas Bank, these are some of the stocks that surged on reports of a QIP. And metal stocks, of course, saw hectic buying as well. The metal index was up in excess of 3% yesterday. HCL Tech from the IT pack, because IT and FMCG were the top laggards. Perhaps those were the sectors that capped the gains on the index. In fact, capped further up move on the index. And that was largely led by a sell-off in HCL Tech shares. That stock saw its biggest single-day fall in 10 years, almost a decade. After guidance kind of disappointed the street. But in terms of other movers, you had NTPC Green. That stock was moving higher with healthy volumes. And let's also take a look at the put call ratio then. The Nifty put call ratio jumped to 0.86 vis-a-vis 0.72 in the previous session. And looking at the F&O ban list, Angel One, reacted to numbers yesterday. That stock was down somewhere around 7.5%. And of course, that's a new entrant in the F&O ban. And some of the stocks that will remain in F&O ban are the likes of RT Industries, Bandhan Bank, Hindustan Copper, RBL Bank and L&T Finance. Manappuram Finance, keep that stock on your radar. That stock has come out of F&O ban. FIIs remain net sellers. In fact, yesterday, FIIs pulled out 8,100 crore rupee worth of money. In fact, 8,100 crores were pulled out of the cash market by FIIs. That was the biggest, FII sell figure for 2025 till, year to date. Domestic investors, the buying support is intact. 7,900 crore rupees worth of stocks bought in the cash market. On that note, let me bring on board our guest for today. Joining me is Rajesh Palviya, Senior Vice President Research, Head Technical and Derivatives at Axis Securities. Great to have you on the show, Rajesh. Some bit of relief rally kind of coming in yesterday, especially in the broader end of the markets. In terms of the movement on the upside, would you say it was a one-day wonder, or would you say that there is still some more upside? And what should the strategy be? Should one look at using these rallies to get out of positions where they are stuck?
Good morning, Nandita. So after having a significant correction till 23,000 level, we have witnessed some pullback action from the oversold trajectory for Nifty as well as for the Bank Nifty. In the previous day, broader market has recovered as most of the stocks has witnessed a short covering action. Looking at the near-term structure, we may see some more recovery to continue further. Possible rally can extend to 23,300 to 350. That's the area where, again, major supply zone is placed for the near-term perspective. Looking at the call put concentration, the range which we are looking for the market for near term to short term, that is 23,000 on the downside and 23,500 on the higher sides. So that could be the possible broader range for the Nifty at this juncture based on the call put concentration. In the previous day, the major put writing has been witnessed for 23,000 as well as 23,100 strike. So I think if we continues to hold about 23,100, Nifty may attempt to give some more pullback towards 23,300 to 350. That level again, need to revisit once Nifty visit around those level. So those who have already bought at the lower level and holding the position can hold the position and trail your stop loss towards 23,100 for Nifty spot. Try to book some profit around 23,350. That's the target we are projecting. It's still, if we analyze on the short to medium term perspective, still market is in, bearish zone until the Nifty not crosses about 23,600 zone on a weekly closing basis. It's a sell on rise kind of market. But as we are already in oversold trajectory, so some pullback would be there. So those who wants to trade on the both side can hold the long position for near term perspective. But on the higher side, again, if Nifty reaches to the level of 23,500 kind of zone, again, one should look for, going again short around those level as structure is still weak for the short to medium term perspective. For Bank Nifty, 49,200 is the key hurdle for the Bank Nifty for this pullback. If at all Bank Nifty crosses 49,200, then some extension of rally we may witness to 49,600. But again, looking at the most of the banking stocks, constituents of the banking stocks, still they are in the weak zone only. So Maybe some mild pullback action towards 49,000, 49,000 we may witness. But again, there one should ready to book a profit if you are already holding the position. At this juncture, we would suggest to keep your stop loss at 48,500 to hold your long position for Bank Nifty also.
Okay, the setup is weak. Use bounce, any kind of bounce to sell on rise. That's the call, because the sentiment is rather poor and nothing really has changed after yesterday's up move. But what would you do with an HCL Tech after yesterday's move? It was the biggest single day drop in almost a decade. Of course, IT stocks have been outperforming, the broader indices. If you look at the yearly performance as well. But yesterday's move, particularly on HCL Tech, does that signal a reversal on the charts?
So HCL Tech was the outperforming stocks from whole IT pack, and that was the only stock which was enjoying its all-time high trajectory. Post numbers, there is a big cut in the stock prices. Stock has given a breakdown to its, upswing channel on the downside. So looking at this breakdown, if it sustained below to 1850, 1860 zone, I think we may see furthermore downside towards 1740 to 1750 kind of zone on the lower side. So yes, there is a short built up in the previous day. Stock slipped below to 20-day, 50-day moving average. Stock has broken its important support area on the near-term chart. So I think until the stock not able to cross above 1860, 1870, I think trend is likely to remain on the weaker side for near-term perspective at least. So possible target towards 1760, 1750 we may see in the continuation of this down move.
Another stock that I want to get in your thoughts on, I think we are just about, waiting for the markets to open, just a few seconds to go now. But just want to get in your thoughts on, on the likes of Angel One has entered the FNO band. The stock has been stuck in a downtrend. If you look at the last 1 month chart, it's down over 25%. All right, I think the markets have opened. We have the opening bell. I'll come to you on this particular stock, but let's look at how the markets have really opened up. It is a positive start as was being expected, an 80-point bump up, 23,250. That's where we are at the open. The Sensex also up by 330 points or thereabouts, 76,800. And the mid cap index, continues to build on yesterday's gains, 0.6% kind of an uptick on the Nifty mid cap index. Advanced decline ratio, early days, but almost 5:1 NSE advanced decline ratio, 1,300 shares advancing to 269 shares declining. So all in all, a good start. But let's see what the other sectors are up to at the current juncture. Want to see what the IT pack is doing. Yesterday, that was the top laggard, up 0.3%. So yes, I can see that most of the sectors are actually trading in the green. Want to see what the metal pack is also doing, because yesterday metal index was up 3.5%, and even the PSU Bank index that was leading from the front yesterday, 4% gain on the PSU Bank index. Today, all the sectors in the green, as I mentioned, across the board buying coming in. The metal pack is up 0.5%. Autos are up almost 1%. Look at the IT pack, 0.2% higher as of now. FMCG as well, mildly higher, but still trading in the positive zone. The PSU Bank index is up 0.5% or so. In terms of the top movers on the Nifty, Maruti is taking the lead, 2.5% uptick coming in here. NTPC, BPCL as well. BPCL of course gaining because crude prices have cooled off below that $80 per barrel mark, cooled off from 4-month highs. So BPCL 1.5% higher. IndusInd Bank, third straight day of gains coming in. Another 1% uptick coming in there. BPCL, as I mentioned, Tech Mahindra, Coal India, Kotak Mahindra Bank, Bajaj Auto. Even HCL Tech has limped back, almost 1% higher at the current juncture. L&T, Power Grid, some of the other movers, and you also have Trent, that's among the gainers. On the flip side, Shriram Finance, that's the top Nifty laggard, 2% lower. M&M bucking the trend here. Most of the auto names are in the green, but M&M is the second top loser on the Nifty. Bajaj Finserv, Tata Consumer, Axis Bank, Nestle, Bajaj Finance, SBI Life, Dr. Reddy's. These are some of the other laggards. Even HDFC Life ahead of numbers is trading in the red. But coming to you, Rajesh, Angel One, that was the stock I was talking about before the market opened. Right now, it's up somewhere around 2% or so. Yesterday, it was reacting to numbers. Also, the stock is in F&O band today. 2,400 is where it's at. What is the kind of level one should be watching out for here? Because the stock has been stuck in a downtrend.
So stock has taken the support from its important support zone trajectory of 2300, and I think if it continues to hold about 2300, some pullback action we may see in this stock. And in this pullback, yes, possible supply zone which may see in the near term perspective, that is around 2450 to 2490 kind of zone. Though structure for the stock is on the weaker side for near term to short term. So sell on rise would be a strategy until the stock not crosses about 2550 zone. So that level needs to watch on the higher side. So till stock is trading below 2550, any minor pullback action should be used as a shorting opportunity. On the breakdown below 2300, this stock may go further down to 2100 also.
Okay, the stock may go further down to 2100. But one stock that's buzzing in trade, is Shoppers Stop, up 8%, result reaction. Good set of numbers, profits up 41%, revenues have also seen double digit growth, almost 12%. Even margins have expanded by 20 basis points. The stock 8% higher, as I said, and in the last 1 month as well, if you see, it's an 11% gain. But the last 6 months, we've seen it shed somewhere around 19%. The stock is just coming off its 52-week low, so to say, which stands at 575. But today's move, does it signal, some kind of a reversal in the trend, in the recent trend? And of course, should one really shop for this counter?
So after almost spending of 8 to 10 week in a range, a very tight range of 660 to 600, now stock managed to view breakout of almost 7-8 week consolidation. Looking at the breakout on the near term chart, we believe that if it's hold above 660, 655 zone, some more upside towards 700 to 720 we may see in the near term perspective. So after a long correction and consolidation, stock managed to view breakout on the weekly chart of its falling trend line. So I think some more upside can be there in the stock. So those who have already bought or want to buy at current level can buy with stop loss of 648, upside target 700 to 720 we may see in the near term perspective.
Okay, that's the view on Shoppers Stop, but I want to also get your thoughts on a Sula. The stock is up and about today, 2.5%, but it came out with its third quarter update. Not all that encouraging. If you look at the revenue, that's down almost 1%. Own brand revenue is also up just 1%, although wine tourism revenue is up 11.5% on a YY basis. The stock has come very close to its IPO price. It has not been doing all that well. Do you see further downside, perhaps the possibility of it breaking below the IPO price as well? Is the hangover really going to continue on this particular stock?
The trend is still weak. A series of low top, lower bottom formation is there in the Sula. So I think if it's remain below to 400 zone for next couple of week, maybe stock may break its previous swing low or IPO price also. On the downside, if it's breaks below 370, 365 zone, I think next target on the downside we may see towards 345, 340 also. So 400 is the crucial supply zone on the high side. Until the stock not crosses those level, I think one should remain on the short side of trade or don't buy at this level, as trend is still weak. There is no sign of reversal at this juncture for near term to short term perspective.
Okay, what about the Adani group of stocks? They saw very good traction yesterday. Some of them rallied somewhere around 15 to 18%. Also, in particular, Adani Green, although Adani Green's moves weren't all that, great in comparison to other stocks. The stock is in focus today as well, on the back of news flow. Its arm has commissioned 57.2 megawatt wind power component at Khavda, Gujarat, and total operational renewable generation capacity has now risen to a little over 11,600 megawatts. We also have a query on our feed. I was just going through it. Nitin Shahji wants to know if there is a good entry point for Adani Green in particular. He's looking for a fresh entry. Should one take at these levels? And how would you really approach the entire Adani Group stocks now?
So we witnessed almost a 5 month down move for Adani Green, and some recovery was there in the previous day. Stock has almost corrected to the level of September 2023 swing low. So from oversold trajectory, there is a pullback action in Adani Green. And again, in this pullback, stock needs to cross above 1080 to 1100 zone. That level is very important for the stock for this recovery to extend further. Though structure is still weak, but some pullback action as the stock is already in oversold trajectory is witnessed. So if you want to buy the stock in the decline, I think the attractive level is 950 to 920. That's the area where stock has good buying interest in the downside. So if you get opportunity around those level, can be looked at to buy around those level with stop loss of 850. On the higher side, on the breakout above 1100, stock may attempt to continue furthermore upside towards 1250 to 1300 kind of zone. But looking at the near term structure, I think stock may face further more supply pressure on higher side. So some consolidation again in the range of 1100 to 950 we may see for some more couple of week for the stock.
Okay, that's about Adani Group of stocks. Hope that answers your query. But I want to get in your thoughts before I take up more queries. I want to get in your thoughts on a BSE. We've had a slew of brokerage notes on the stock. Yesterday we had Jefferies upgrading the stock. Today we have Nuvama initiating coverage with a buy call target price at 6,730. The stock is now at 5,678. Of course, in the middle it did come under some bit of selling pressure, but it is witnessing renewed momentum. In the last 5 days or so, it has rallied over 6% or so. Where do you expect the next resistance level? The 52-week high is at 5,837. 6,000, could that be a possibility in this leg of up move when it comes to BSE?
So again, stock is showing very strong buying action since last couple of days. This is the third consecutive day where we are seeing that strong buying action has been there in the counter. Looking at the near-term structure, yes, there is a possibility that stock may continue furthermore upside, and possibly stock may try to hit its all-time high trajectory, which was at around 5840 kind of zone. I think if it crosses those level, yes, there is a possibility that stock may able to surpass 6,000 even beyond that level also. Stock managed to give breakout of its falling channel on the daily chart. Stock is comfortably holding about to 20-day, 50-day moving average. So I think yes, there is a possibility that this rally may extend, and 5850 to 6,000 would be the next target for the stock. So those who are already bought stock or holding the position can trail stop loss towards 5500 to hold the position for BSE.
Okay, that's the call on BSE then. But let's shift focus and take up some queries this morning. Sandeepan Shah wants to know your thoughts on ITI and IEX. He's not mentioned whether he has any holdings, but he wants to know if there are more downside possibility, or if there's a possibility of more downside in these two stocks. Your thoughts?
So IEX still in a downtrend. Stock is now trading near to its critical support area of 160. So that level needs to watch closely. If it breaks below 160, we may see furthermore down move. So that needs to keep as a stop loss if you already bought the stock. If it breaks below 160, then possible down move can extend to 155, 150 to 150. The major supply zone is placed at around 174. Until the stock not crosses those level, trend is likely to remain on the bearish side for the stock. ITI again, it's fifth consecutive day where stock is witnessing supply pressure. Stock overall long-term structure for the stock is on the bullish side. Some correction is there in the stock in line with the market. In the decline, if you get opportunity around 370, 375 kind of zone, that's the attractive level to buy this ITI in this decline with stop loss of 355. On the high side, once stock crosses above 425, the rally can extend to 500 kind of level also on a positional perspective. So here you can look to buy in the decline towards 375, 370 zone.
Okay, that's about ITI and IEX. Hope that answers your query. The next query is on Arvind Smart Spaces, and this one has come in from Satya CK. Wants to know the short to medium term outlook on the stock. He wants to add. He already holds a few shares, which he bought a few months ago. The stock has been witnessing selling pressure since the last 3 months. 1 month as well, it has shaved off almost 19%. But do you think these levels are good for buying additionally in the stock?
So stock is almost hovering near to its 200-day moving average, which is placed at around 770, 760 zone. Stock is trying to hold out this level. So I think if it continues to hold above 760, then yes, it's an opportunity to buy stock for some pullback action from here onward. But looking at the market condition, markets are still volatile. There is no stability in the trend of market at this juncture. So I think wait for another couple of days and let's stock to settle down at 200-day moving average. It's not breaks below 760, then you can deploy some trade in the stock. But if it's a slip below to 760 on a closing basis, then a possible down move can extend, and then in a decline, the stock may attempt to go down towards a 700 kind of level also. So I think I would say wait at this juncture. Don't buy at this juncture as market is still under pressure on the higher side. So this stock may give breakout below 200-day moving average, then you may get lower prices around 720, where you can again review it, or you can deploy some long trade around those levels.
All right, that's the call. You may get better levels on this particular stock. But let's talk about a GSW Energy as well. That's the next query coming in from Naveen. Wants your thoughts. Hasn't really sent in a pointed query, but I was just looking at the charts. In the last 6 months, the stock has sold off 23% down. 550 is where it's at, and it's just about 100 rupees away from its 52-week low. Would you expect a further down move, a further downside? Perhaps those levels may be breached.
So stock is in downtrend, and stock has broken its important support area on the daily weekly chart, which was at around 640 level. So a major breakdown has been witnessed on the stock for near term to short term perspective. So until the stock not crosses over 600, 640 zone, sell on rise would be the strategy for stocks. This was the new entrant for the F&O, and after entering into the F&O universe, I think more supply pressure has been emerged in this counter. On the downside, if it breaks below to 525, I think furthermore downside towards 480, 470 we may see in the counter. So avoid at this juncture, don't buy the stock as trend is still weak. Sell on rise would be the strategy. If you get around 580 to 590 zone, if you want to short, you can short with stop loss of 610. On the downside, possible target towards 525 we may see on a positional perspective.
Okay, that's the view on GSW Energy. But moving on to the next query, I will take this one up on sale. Pankaj Kajalia wants to know your thoughts. His buy price is 117. He wants to know if he should add more. This is one stock that has been battered quite a bit. Last 6 months, 30% has been shaved off. although it's holding on above that 100 level. 106 is where it's at, but he's making a loss. Should he average, or should he look at cutting, should he look at booking some losses here?
No, I think don't average out the stock. Stock is in a weak zone. This is the sixth consecutive month where stock is witnessing lower high low formation. That clearly shows sustained supply pressure is there in the stock. Stock is now almost approaching towards its September 2023 swing low. I think if it breaks below to 102, then furthermore cut towards 95, 90 kind of level we may see. So on the higher side, 120 to 125 would be the major supply zone for the stock. He has already bought at very higher level. Almost he has bought at the its previous swing high, which was there in the May 2024. So I think the pain would be there for the stock for next couple of months till the broader market not start recovering. I think there won't be any kind of substantial recovery we may see in this counter. So 120 to 125 would be the major supply zone. If you want to exit in the stock, wait for some pullback around those level 125 and then exit from those this stock. And you can try to buy some other metal stock instead of keeping your investment in sale, as structure for this stock is still weak on the near term, short term time frame.
Okay, that's about sale. Don't look at averaging at the current juncture. That's the advice. Just want to quickly squeeze in 2-3 more queries. One query on CONCOR. Ayush Khanna wants to know your short-term call on CONCOR. Of course, there was news flow yesterday that the company has missed its FY25 guidance, on key parameters. But the stock was up 5% yesterday. Ignoring those, the news flow. But particularly for CONCOR, any level that you'll be watching out for in the short term, in particular?
No, stock is clearly in a downtrend, a series of lower top, lower bottom formation on the daily, weekly time frame. There is no sign of recovery in the stock. Some pullback action was there, but again, the steep resistance is placed at around 790, 800 zone. Until the stock not crosses above 800, there won't be any hope of recovery in this counter. On the downside, if it breaks below to 740, this down move can extend further, and then possible lower target towards 720, even 700 we may see in the near term to short term for CONCOR.
Okay, that's about CONCOR. I want to quickly take up some more queries then. Kishore wants to know your thoughts on HPCL at the current price. Of course, OMC is maybe a bit upbeat today because crude has once again cooled off below that $80 per barrel mark when it comes to Brent. How would you approach OMCs now? I think there was a brokerage note as well on OMCs this morning. But given the fact that OMCs have been, tend to react to crude movement, how should one approach it, at least for the near term?
I think most of the OMC stocks are trading in broader range for its Hind Petro. The lower band for this range is placed at around 355, and on the higher side, 390, 400 are the upper band for this range. Until the stock not crosses above 400 level, there won't be any major up move or short covering we may witness in this counter. On the downside, 355 is the key support area. So if you want to do some trading activity in this counter, if you get opportunity around 360 or 355 kind of level where you can deploy some long side of trade with stop loss of 348. In the pullback, 375 to 380 are the area where again you may try to book profits also. At this juncture, I'll say avoid as clear. There is no clear trend at this juncture. Stock is in consolidation. So try to buy near to the support area only. So wait for some dip. If you get opportunity around 360, then only you buy this stock, or wait for the breakout above 400.
Okay, that's the call. The report that I was alluding to before taking the query was from HSBC, and HSBC believes that the recent stock correction in fact makes them attractive, and they have maintained a buy call on the likes of BPCL, HPCL and IOC. But with that, I'm afraid we've come to the end of the query segment. But Rajesh, leave us with some recommendations for our viewers.
So I think IT would be the space where we may see some more pressure to continue. So I think HCL Tech is again on our radar only, as stock has broken its important support area. So I think we may see further more downside. So try to short around 1850, 1860 zone with stop loss of 1890, and on the downside 1760 would be the target for the stock. On the buying side, I think Bajaj Finserv can be looked at, though market is facing some supply pressure on the high side. But again, if you get opportunity to buy Bajaj Finserv around 1650, 1640 zone, that's the attractive level to buy this stock with stop loss of 1620. On the high side, 1700 to 1720 would be the target on a positional perspective.
Okay, that's the view then in fact, those are the recommendations then coming in from Rajesh. With that, Rajesh, would like to thank you for taking out time as usual and joining in. Look forward to connecting again next week. Well, in fact, the markets have reversed course as we speak. We were a good 80-90 point higher when we started the day, but now the Nifty has slipped into the red, down by 9 to 10 points or thereabouts. Mid cap index is also completely fizzled out. In fact, the mid cap index is now lower by 0.4%. The Nifty bank index has also given up all its gains. In fact, if you look at the advanced decline ratio, it has now taken a reverse. It's now been a reversal when it comes to the advanced decline ratio as well. 2:3. That's the advanced decline ratio on the NSE. 950 advances to 1295 declines. So the texture has completely changed, as most of the experts have been pointing out. Sell on rise, sell on bounce. That's the kind of strategy that seems to be, or that's the kind of trend that seems to be emerging. Until the time 23,350 on the upside is crossed, that could remain intact. But on that note, let me bring on board our next guest for today. Joining me is Kunal Shah, Senior Research Analyst at Carnelian Capital. Kunal, always a pleasure chatting with you. First of all, wishing you a very happy new year. It's the first time we are interacting this year. Hope it turns out to be a better year for the market, not turning out to be great as of now. But looking at what's happening, would you tread with caution? What is the kind of strategy you guys are talking about in Carnelian? Would you be on the sidelines right now? How are you approaching the market?
Good morning, Nandita. Wishing you and your guest a happy new year. I think at the start of the year, we wrote a letter to our investors stating that, this year the pitch is going to be dry. So, it's a test match. It's not like, you have to hit all the balls. You have to preserve the wicket. And when the right ball comes in is the time when you have to hit it out of the park, right? So similar kind of scenario is something which we are placed right now. This year is going to be the year where one should have low expectations. Also, there are quite a few events that have been lined up in the next 15 days. And Trump is going to be having its inaugural session on 21st. Then budget is lined up. We have seen yields hardening. We need to see what actions Trump take. Rupee, we have already seen. If China further depreciates, then how it will unfold are all the things one should keep in mind in the current year. But all said and done, it's not that structurally anything changes for India. And all this provides a good opportunity to build a portfolio then which can shine in the coming years.
Hope we get past this dry spell, soon. Hope the pitch conditions improve going forward. That's what we are all hoping for. Of course, as you mentioned, key, events lined up and quite a few of them. But, let's talk about the earnings then, because, a lot of experts have been pointing out, adopt a bottoms up strategy now, look at stocks on a bottoms up basis. And for that, of course, you need to look at how the stocks are poised when it comes to third quarter earnings. So far, large cap IT names have handed in their report cards. In terms of commentary, pretty good. But HCL Tech was punished. Of course, guidance disappointed street. How are you looking at these numbers, TCS and HCL Tech, in terms of FY26? Because the recovery is still in early stages, taking shape right now. But looking at what has come out so far, what is your take?
See, IT stocks have rallied to a great extent in the last 6 months. So obviously, if there's a little bit of disappointment when it comes to earnings or guidance, you will see the action what we saw in the likes of HCL Tech. Also, last time around when Trump was there, we saw a few actions like, restrictions on H-1B visas, increasing the minimum wages. How this will kind of play out now when Trump begins is also something which is uncertain. Not to say that this will have a structural impact on IT services, but all said and done, this will be something which will have a sentimental impact and near-term pain if this unfolds. At the same time, IT services and exports is one thing which will benefit again in the short term because of what's happening with rupee. Limited viewpoint over here is that IT services have rallied a lot, but there are certain pockets in IT like ER&D which are available. ER&D plays are available at decent valuations. There could be a little softness in a quarter or two, but where valuations are comfortable in ER&D space is something which could make money in the next 18 to 24 months. At the same time, there are few mid cap and small cap companies which are available at reasonable valuations again in IT services space where there has been management changes. So there is also a pocket of opportunity lying around there which can make money in the IT space. So overall, large cap IT services valuations need to be treaded cautiously. ER&D is something which can make money, and few small and mid cap IT names which has seen management changes and valuation comfort.
Okay, but what about the likes of Persistent and Coforge? If you look at these particular counters, they have seen a very strong, fabulous run. Any disappointment there? Could that make the stocks vulnerable to correction, given the kind of run-up that they've already had? In other words, are valuations already factoring in a 4 to 5% kind of top-line growth for these companies?
Absolutely. Valuations are already factoring in the bounce back in the earnings and the TCVs that could come by. So we would be taking more of downside risk than an reward perspective from here on, incrementally for IT services companies and also the names you mentioned.
Another question when it comes to the IT space, what would be a fair revision, a guidance revision from Infosys? Currently, it's at 3.75 to 4.5%. That was at the end of Q2. Street is veering towards 4.5 to 4.75. Would you also be working with such estimates?
I think it's a fair assumption, but then let's see numbers around the corner, Nandita.
Sure. I take your point. Of course, we can, in fact, look at touching base post the Infosys numbers tomorrow. But let's talk about other pockets as well. Banks for one, banks have come under renewed selling pressure. We've seen what has happened with Nifty Bank Index. But what about the smaller, mid-sized banks? So some of the banks, the likes of UCO Bank, Indian Overseas Bank, some of them saw very good traction yesterday on the back of a news flow that the government has okayed stake sale via QIPs and a fundraise of almost 10,000 crore rupees. But could that be a trigger for the next leg of rally? Because most of these stocks have shaved off as much as 15 to 20% if you look at the last 6-month performance.
Right. So, banks are something which are largely owned by FIIs. And, we have always seen historically as well, right, whenever they're selling by FIIs, largely held and owned stocks are the one which are sold, and that is the case with the banks because these are widely owned by FIIs. So that's the reason why when all the selling happened, banks were under pressure. Now coming to your specific question on PSU banks. The PSU banks trade at good valuations, but a recovery which was aiding profitability growth for a lot of PSU banks in comparison to their peers at private banks has something kind of slowed down in the last quarter, and our believers would kind of slow down from year on as well, which was aiding profitability for these banks. So what will have to be seen is the core operating profit growth for this PSU banks, which will drive a re-rating from here on. Few PSU banks are in good shape where they have got very strong liability franchise available at reasonable valuations, run by good management. Should see a good trade from here on in the next 6 to 12 months is the view that we have.
Sure. Last question really, Kunal, as you step into the budget, which sectors would you keep your focus on? Would it be, capex plays, or would it be more tilted towards consumption, given the fact that since there has been slowdown, even signs of slowdown in urban consumption, do you expect the government to, work towards boosting consumption more, or do you think it will be a more capex oriented budget? So which pockets would be in focus this time around?
Nandita, one thing that the government has done well in all the budgets so far, they have balanced both, capital spending and consumption spending. I think this budget will be no different, but there will be balanced spending on capex as well as consumption. So I think manufacturing and capex play should continue to kind of do good, and something which will be the talking point in the budget. At the same time, we should see some action being taken on the consumption side as well, seeing the lower level, of the economy facing issues pertaining to spending. But again, I believe that it would be a balanced budget. It will not be tilted on either side. That is what we have seen historically, and we believe that will continue the same time as well, this time as well.
Okay, expect a balancing act when it comes to consumption as well as capex. With that, Kunal, always a pleasure chatting with you. I look forward to connecting with you soon, perhaps tomorrow, given the fact that Infosys is reporting numbers tomorrow. So we'll touch base with you and see if you're free to join us.
Thank you. Pleasure. Mr. King.
Thanks a lot. Thank you. On that note, the markets are oscillating between the red and green zone right now. Once again trading in the green, up 18 points or so. So yes, it is a fairly, it is turning out to be fairly volatile at the current juncture. Let's see, in this tug of war, who wins, the bull or bear. But important bit of news flow. RBI has announced the reshuffle of deputy governor portfolios following the retirement of Michael Patra. Now, M. Rajeshwar Rao has been appointed to lead the critical department of monetary policy just ahead of the upcoming Monetary Policy Committee meeting that takes place between 5th February to 7th of February. Moreover, the Financial Market Operations Department has been assigned to Deputy Governor T. Ravi Shankar. Now, RBI said that the distribution of portfolios among the deputy governors will be effective today. So that's some important news coming in, of course, after the retirement of Michael Patra. But on that note, we've come to the end of this edition of Opening Bell. We are kind of, as I mentioned, oscillating between gains and losses. The mid-cap index is also attempting to get back into the green at the current juncture. But with that, thanks a lot for tuning in. Stay tuned to Money Control for all your, news and updates. And of course, I'll see you at 3:30 p.m. with the market close. गणेश जी कुछ ऑडियो में इशू